All right, guys, so there's five main Greeks in options trading. There are other ones, but these five are the main ones, and they basically have to do with the change of an options contract price as there is a change in the dollar value of the underlying stock, the underlying asset. So you have delta to explain the change in an option when the price of the stock increases or decreases, and then you have gamma, which is very similar to delta, but it's how the stock market maker needs to hedge their positions. Rho has to do with interest rates, and so the value of an options contract will in fact vary with the interest rates in the macroeconomic conditions. But our favorite, and the one I'm going to talk about today, is theta. And theta is time decay, and when you're selling options, theta really works in your favor. When you're buying options, theta can turn against you really quickly, and this is one reason it's very scary when you're gambling weeklies, because if you swing the position overnight and the price of the stock doesn't change, well, the time decay will eat at that very, very quickly and very heavily. And I like a good illustration to show. You can look at a graph, and here's 120 days. The price of an option should be affected by nothing else, delta, gamma, vega, rho, but theta. So if everything else remains the same, theta will slowly eat away at the contract, and you see it just slowly eats away at it, and then 1 month out, it really starts hammering at it. So if the stock is not experiencing volatility, or is not moving in the direction that the option buyer hoped it would, then theta will destroy it. And in the last 30 days, and especially the last 2 weeks, you see it just eats it away. And this is one reason we like to sell weeklies, 2 weeks, 3 weeks max, because in these stocks, if the stock, even if it moves against you, but it doesn't move against you enough to counteract the time decay, you see it just, the graph just goes, it just gets destroyed. And here's another illustration. You can see it just slowly bleeds, slowly bleeds, slowly bleeds. Well, this is 1 month out, it really starts getting hurt, and then 1 week out, it just gets hammered. And this is one thing we really love about theta decay, and why we like to sell options, because time works to your advantage. And if the price moves up, in the direction that you're hoping, you're golden. If it stays the same, you're golden. Even if it moves against you, but just not enough to counteract the time until expiration decay, you're still golden. And this is one of the reasons we love theta decay. And I just wanted to show this illustration so you guys can see it happens slowly, it gets a little quicker, and then it just dies. We love theta decay. I've got some explanations in the Discord. You guys can read through it. But this can all be found online. It's nothing too difficult to find. And implied volatility. We sell options on stocks with a high implied volatility because they have a high range, but we like to stay within a certain range. So if they're expected to move within a certain range, we like to sell options just outside that range or barely within it, and then we let the theta decay work for us.